All right, Manisha, our first question comes from Penelope. She asks, I love the holidays, and when I'm in stores, things just jump off the shelf at me. What's the best way to keep from spending too much over the holidays? Penelope has a common problem.
Okay, so Penelope, what you need is a tool of reference when you're out there shopping, and the best one I have ever come across comes from a fabulous book called Your Money or Your Life. What you do is translate your income into an hourly after-tax wage. Simplest way to do that is take your income, divide by 2,000 if you work a standard 40 hours a week, 50 weeks a year, and then multiply by your tax, 1 minus your tax rate. So stir all that up. If you make $40,000 a year, you're earning about $20 an hour after tax. So next time you see something that costs $200, you can say, gosh, is that really worth 10 hours of my time? That's the single best tool I've seen to help Penelope with a very common problem.
That will certainly put it all into perspective, definitely. All right, our next viewer, Jin, tweets in, what is the easiest way to track your expenses? Something a lot of people want to be doing right now.
Well, Jen, there are a lot of wonderful online services, Mint, Thrive, Quicken, but the one I use is very complex. It is a piece of paper that I put in my wallet, and every time I buy something, I literally whip out the piece of paper and I write down groceries, gas, telephone bill, and then at the end of the month, I take about 15 minutes, I add it up, and I put it into an Excel spreadsheet that I have set categories for. And I highlight this because people have different preferences, and I want to say if you want to track your expenses, it doesn't have to be a complex process.
It doesn't even have to be one of those websites. Just good old pen and paper will do the trick.
Absolutely.
All right, now Sandra wants to know, why are interest rates on savings so low while interest rates on credit cards are so high? That doesn't seem fair. It certainly doesn't seem fair, does it, Manisha?
No, Sandra, and I hear you, and here's the answer. Welcome to the recession. So interest rates are low for two basic reasons. One, the government is trying to get the economy moving, so it wants to keep the cost of borrowing down. Also, people are very scared of the stock market right now, so they're flocking to bonds, which pushes the prices up and the interest rates down. That's what's happening on the interest rate side in terms of what you're earning on investments. On the credit card side, something else entirely is going on, pretty much unrelated, which is called the Credit Card Act of 2009. It's some legislation that will help you in the long run, but in the short run, what we're seeing is credit card companies hiking those interest rates.
So what can she do? Should she just wait it out?
So the best thing to do is to take the tough lumps and use this as a reason to pay that credit card debt down as fast as you possibly can. 10 years ago, many people said to me, it doesn't matter if I have credit card debt, I'm earning more in the stock market. But now, any extra dollar you have, it's a guaranteed return if you use it to pay off that high interest credit card debt.
Absolutely. All right, Manisha, thank you so much. Walter of Pasadena, California writes in, and he wants some investment advice. Should I invest in gold? And we certainly have seen the price of gold go up lately.
Yeah, I mean, for years it was floating around $300-400 an ounce, and whoosh, went into 4 digits, over $1,000 an ounce. Walter, the thing that makes me most nervous about your question is that lots of people are asking me it. And typically, I found this in the late 90s, people would be saying, Manisha, is it time to invest in tech stocks? The price of gold is based on supply and demand, and right now it seems to me that there's a lot more demand, and at some point when the stock market starts to move ahead, I think people are going to start to find value in other areas. So unless you're a trader, I would think long and hard about jumping into gold at this point in the game.
Would you send in your gold, let's say? Is this a good time to try and sell some pieces, perhaps?
I'd say you've made a pretty profit by this point, and could you leave a little on the table? But I'd sell. Maybe
Granny's brooch. You might want to hang on to that. All right, Manisha, thank you so much for being with us and all your helpful advice.
Always a pleasure, Tanya.
Remember, you can go to our website. It's abcnews.com/business to ask Good Money's team of personal finance experts all your finance questions.
ABC News Now. Good to know.